All right, formally, good morning, everybody. I can say that even for our friends, obviously, on the East and West Coast joining us. For those of you who are going to watch this afterwards as part of our greater community, welcome to the Advisor Network Connect. This is session 4 of day 2. We have a wonderful set of discussions throughout the day today, and I love how many different topics we're going to be able to cover. So let's work our way through the network at a glance. More than 7,000 wealth management professionals over the last 19 months have joined this network. Extremely proud of that number. Also very proud. 250 of you have joined the interactive collaborative platform that allows you to interact with one another and share your best practices. So great to see in our study groups in that collaborative platform folks that are just sharing what they're great at taking notes, reaching out to each other yesterday and saying, how can we learn more from one another? Doing our 2 to 4 webinars every month, divided between advisor to advisor and thought leadership from our institutional partners, like our friends here at Schwab, and our national meeting and 3 regional meetings that are coming up starting in August. Our Northeast Regional in Saratoga Springs. If you've never been, I highly recommend it. It's a wonderful day, a blend between, again, content and collaboration. We'll do a 1 day out in the West Coast in beautiful Orange County. And then last but not least, in the fun Las Vegas, Nevada, we are going to do our Advisor Network Connect, which is a really robust grouping between the social collaborative aspect of things and, of course, a robust agenda that folks can enjoy. So let me start with our speaker introduction. I'm not sure if Mike remembers this in the past, but I had the pleasure of talking to Mike a few times before. And every time I do, Mike, I've got to tell you, I learned so much more about the state of Congress, the state of the politics, and really sometimes the intersection, obviously, of the markets and how much it really intersects in so many ways. So, Michael Townsend is the managing director of legislative and regulatory affairs at Schwab. And Mike, you've got such a good breadth of knowledge for this. Why don't we start this morning by maybe let's take a pulse a little bit. Let's look at Congress. Kind of where do we stand? What are the feelings? What's the vibe these days? And we'll start with kind of the high level.
Sure thing. Well, thanks for having me on, and hi everybody. Great to be with you. Yeah, look, it's crazy here in Washington. I say this all the time, but every day is kind of its own little circus, and it's a pretty incredible atmosphere. It feels like there's a whole bunch of stuff that happens every day that is really big news, to the point where it's almost overwhelming. There's so much happening, and you can't almost take it all in. So the vibe is pretty crazy right now, and just to set the stage, I think as everybody knows, we're in an all Republican environment here. So 218 to 212, with one independent is the count in the House of Representatives. There's actually 4 vacancies, a couple of which are going to be filled by special elections in August, a couple of which won't be filled until the big election in November. And then 53-47 is the margin in the Senate for the Republicans. And what's really interesting when you talk about this sort of vibe, the Senate is a really interesting place right now because you have these kind of what has been called the YOLO caucus. You only live once caucus, because you've got a couple of Republicans who have been defeated in their primaries, President Trump ran basically candidates against them. So Bill Cassidy, a senator from Louisiana, John Cornyn, senator from Texas, have already lost their primaries, yet they're here until January. And they're sort of untethered by politics and are kind of free agents. And there's actually a number of senators who are like that. So it's made the Senate kind of a really strange and unpredictable body right now. But just the overall level of sort of day-to-day craziness in this town is unlike anything I've seen in 30 plus years of working in Washington. And I tell people all the time, it's a lot of things, but it ain't boring right now.
Mhm. Well, it's funny you mentioned, I'd say craziness. To me, to pivot for a second, I want to think about the war in Iran for a moment. The crazy part is we're at war, we're not at war, we're at war, it's over, but oh, it's back on. To talk about this, if you can, just thinking about the Washington perspective, how does that kind of affect the overall markets? How does it affect politics? This war is really here.
Yeah, I think we've seen how it affects the markets, and the markets are sort of reacting to the on again, off again. And there have been a couple of organizations, media organizations, that have been tracking how many times the president has said that the war is over, or the war has been won, or that there's a ceasefire, or a deal is forthcoming, some kind of agreement to end the war. And we're approaching 40 different occasions in which the president has said that. And, just looking even at the last couple of weeks, we were in a ceasefire period, then we were not in a ceasefire, 12 consecutive days of military action and bombings. Then we were in a pause. Now, I guess that's the official word, is we're in a pause this weekend. And you can almost track oil prices based on those comments. So the president just putting something on social media or saying something in an interview is literally affecting oil prices on a day-to-day basis. And I think that's strange. And here in Washington, it's growing frustration around what's the long-term goal, what even constitutes success anymore. And obviously the uncertainty around, is the Strait of Hormuz open? Is shipping flowing smoothly? But here at home, and the way that this I think really hits politically, it's all about gas prices. I tell people all the time, gas prices are the single most visceral number in the economy. It is the one number that everyone knows. And in fact, most voters, when you talk to them about how the economy is doing, they are not talking about GDP or inflation. They're talking about gas prices and grocery prices. Those are the things that they care about. And so we've seen how, gas prices came down quite a bit, and they back up over $4. That's a big political landmine for Republicans heading into the midterms. And I think that's where Republicans in particular really frustrated with the sort of on again, off again, no clear path forward nature of this war.
I think it's funny, you use the word pause. I'm going to move around a little bit. When we said pause, I would have thought we were talking Federal Reserve, but we're talking about a war pause. But we do have the Federal Reserve today. And if you're watching this after the fact, today is Fed Day. So you may not realize that Michael gets to go just before we potentially get our news. But let's talk about the Federal Reserve. A lot of changes at this point. We had what we believe to be maybe a trajectory going into things, but things have shifted a little bit on the Federal Reserve, at least what I'm hearing in some of the headlines.
Yeah, I mean, we are talking, this is what, we're a couple hours now before the decision. It's been a long time since we genuinely didn't know what the monetary policy decision was going to be. I'm in the camp that I think the Fed will likely hold rates steady, but there is certainly a camp, and there's certainly Fed funds futures and other metrics are saying that there's a significant camp that thinks we could see a rate hike today. So we'll find out here in a couple of hours. I think, though, in a larger sense, this is kind of what the new chairman, Kevin Warsh, wants. He is against sort of communicating basically ahead of time what the Fed is going to do. And he's not a fan of forward guidance. And here we are. We don't have forward guidance. So I think this is a really interesting situation. I think the bigger picture is that the market is, anticipating some pretty big changes from Kevin Warsh. He has said he wants to look at how the Fed does everything. And the thing that he has done that I think is going to be very interesting to watch over the next several months is he's created these five independent task forces. Each has three members. They're very, very highly qualified people, former central bankers. There's a Nobel laureate on one of them, economists, business leaders. And he's asked them to look at how the Fed functions in virtually every area, how it communicates, how it deals with its $6.7 trillion balance sheet, how it thinks about inflation, how it thinks about productivity and jobs. And he's got these different sort of, buckets for these task forces to look at. And they're supposed to come back by the end of the year with recommendations about how the Fed is going to do things going forward. And that may mean changing the Fed's preferred inflation measure, for example, to something different. So I think there's a lot of uncertainty around that. But the thing that it gives is it gives Warsh, as the new chairman, a bit of a buffer. to sort of let things play out. He doesn't have to commit to anything right now. There's a joke in Washington and on Wall Street that his answer to everything is there's a task force for that. But it sort of gives him this opportunity to say, look, we're looking into this. We'll be back to tell you more in a few months about how the Fed is going to do things going forward. So it's just a period of kind of uncertainty. I don't expect a dramatic change in how the Fed does things without some telegraphing to the markets in advance. But we're probably not going to get that until late this fall.
So, speaking a little bit about uncertainty and maybe chaos, I want to go back to Congress a little bit. And we've chatted before in kind of late October, leading almost into November, and it's a little stressful time, right? And there's a lot of things. We're in July, almost August, but there's a lot happening right now, and there's going to be some change. And you mentioned some of your thoughts earlier. How does it, kind of what changes are you looking at? And then how does that affect the markets, in your opinion, going into Q3 and Q4?
Yeah, I mean, I think there's a couple of things to watch on Capitol Hill. I mean, this is typical of a midterm election year where there's sort of a lot of noise and churn on Capitol Hill, but ultimately they tend to kick things down the road until after the election. So probably the most notable thing that's going on right now is Congress is already thinking about a government shutdown in October. So of course the government's fiscal year begins October 1. We saw this happen last year when we had the longest government shutdown in history at 43 days. But Congress is supposed to pass all the funding bills that keep the government open, operating, and functioning. They're not going to do that. Look, they almost never do it by the deadline of October, but they're nowhere close to doing that for this year. So here in July, they have already in the House passed a bill that would extend government funding from October 1 to December 4, which is a month after the election. Basically saying we're just going to kick all this down the road and deal with it after the election. The Senate is working on a similar measure. It'll probably have to go back and forth a little bit, but I expect that we will see that passed sometime before the October deadline. Why that matters is it sort of takes off the table the potential of a government shutdown right before the election. And, historically, government shutdowns aren't a huge market mover, but they sort of signify, dysfunction and disruption and uncertainty. And if you remember last fall's shutdown, we went a whole month without any unemployment data, without any inflation data. So that's the sort of thing that's disrupted by a government shutdown. Congress is trying to get ahead of that. There's also a big dispute going on between the White House and the Senate right now over some extra defense funding, which obviously the Pentagon really would like to see in because of the cost of the war. I'm not sure that's going to get done anytime soon. Again, the sense of trying to kick votes off, kick difficult issues off until after the election is really sort of taking hold here in Washington.
Let me pivot for a moment here. At least half of the 7,000 firms that are part of the advisor network are at least somewhat regulated by the SEC. And in addition to the fact that obviously that affects direct retail consumers and otherwise, they make a lot of rules. They're not often in the headlines, but there's some important things coming down the line from the SEC that the advisors on these calls should know about, and maybe how it could impact clients and just the general public.
Yeah, I'll mention a couple of regulatory things, and I'll just preview this by saying, this is not unusual. The first year of a presidential administration tends to be very heavy in legislation, Congress. Think one big beautiful bill last year. There's a lot of momentum when the new president comes in, and there's a real push for big issues. The second year of a presidential administration tends to be heavier on regulatory things, mostly because it just takes a year to get the regulatory agency sort of up and going. You've got to nominate people, get them confirmed, they have to hire staff. So we're seeing that where there's a lot going on in the regulatory space. And I'll mention just a couple of interesting things that are going on. One of the most high profile is the SEC has proposed that public companies have the option of shifting from quarterly earnings reports to semi-annual reporting. I think it's going to be really interesting to see what happens here. My view is I don't think large companies, established companies, are going to suddenly go to, less frequent reporting. Maybe smaller, newer businesses do take advantage of that because there is a huge cost burden to complying with quarterly reporting. But that's something that I think has, pretty significant potential impact for the markets that hasn't gotten a ton of attention. That's in the works right now. So that's definitely one. The other one that I think is really big, and that I think advisors are pretty keenly aware of, is Trump accounts, the new accounts that were created as part of last year for children. And these accounts launched on July 4th. And the key to them is that under the law, babies born since January 1, 2025 are eligible for a $1,000 seed contribution from the federal government. And those contributions have started going to eligible children just here in the last few weeks. What's interesting about the Trump accounts is that it's like they're flying the plane and building it at the same time because they took off, but there's a whole lot of questions about like sort of how they're going to work. One is you can roll them at some point, you'll be able to roll them to the provider of your choice. So, whether that's a brokerage firm or advisory firm, you'll be able to move that to your financial provider if you have one of those accounts. The other thing that is sort of unknown is that the administration has said that you'll be able to make stock donations to these Trump accounts, but hasn't explained how that would work or what the tax treatment of that contribution would be. So that's something that is still in the works. The interesting thing about Trump accounts, I think, is right now they say about 7 million accounts have been opened. A little more than 1.5 million are eligible for the $1,000 contribution. But of course, that's a tiny fraction of the babies that were born. That's about 25% of the babies that have been born. So there's just a huge education curve about these accounts. And then there's just the debate about whether they're, compared to, say, a 529, something, a college savings account, what's the better account? I think that's a place where advisors over the coming months are going to really need to be prepared to answer a lot of questions about what's the right account for my situation. From if you've just had a child, $1,000 is $1,000 from the government. So, that's something. But that's one that I think is going to be really interesting. I'll mention one other regulatory thing that we're following, and this is more in the retirement space. The administration has pushed the Department of Labor to expand the type of investments that are eligible for 401ks. So they're interested in alternative assets, private markets, crypto ETFs, that sort of thing. And ultimately companies are going to have to decide that, but it's interesting to think about having a wider range of investment opportunities in a retirement account. So. Those are just a couple of the things that I'm following pretty closely. I think those Trump accounts and sort of how they take off in the next year or two is going to be something really interesting for the advisor community.
Absolutely. And to get more educated in that space, you just brought up the retirement space. I won't go too much deeper, but we just finished a session a few minutes ago on retirement plans. And part of that is, got the national idea of potentially letting in more investment types. You also have the states adding more and more mandates for types of plans. So depending on where you are, we have, I think, 40-ish states represented across the network. Keep abreast of what's going on here because the choices may change, but also your state may add on additional, requirements or things of that nature, which provide opportunity for you to learn and differentiate yourself as an advisor. Okay, we've done this all the time. This is a little long here to be able to do this away, but I want you to get the crystal ball out, right? And no one's going to hold you to this. So you've got plenty of months to change your answer. And at the end, I want to make sure folks can follow you to see if you do. But let's talk about we went back to Congress to start. We kind of touched a little bit more about some of the craziness going on. But what do you think is going to happen? Are we going to see some significant shifts coming up here in the midterms? And if we do, what could happen, do you think, going on with the markets?
Yeah, first of all, I'd say, it's very typical to have kind of the period from now to the election be pretty volatile in the markets. There's just a lot of uncertainty. And then almost regardless of what happens in the outcome, to see the markets pretty well, get a bounce out of the election, just because the election is over. So that that we see that pretty consistently. But let me talk about where I think things are headed. So House of Representatives, reminder, all 435 members of Congress are up for re-election every 2 years. So all those seats are up. And there are a couple of things that have happened. The biggest one is the fact that there's been a sort of frenzy of redistricting started in Texas last year, went through California. There's about 10 states that have changed their congressional district lines. And the ultimate sort of outcome of that is probably an advantage for Republicans of maybe a half dozen seats. So that's a plus for the Republicans. Almost everything else is a minus for the Republicans. President's low approval rating, high gas prices, high inflation. Just historically, midterms tend to be bad for the president's party. So put all that together, and I do think Democrats are favored to flip the House of Representatives, not by a huge margin, but I would say somewhere in the 8 to 12, come out with a margin of 8 to 12 seats. The House is going to come down to a very small number of those 435 districts. Probably about 3 dozen are gonna determine which way this goes. But I think Democrats are likely to flip the House. In the Senate, I think it's a harder row for the Democrats. The Republicans have a 4 seat advantage, or it's a 53-47. So you need to flip 4 seats in order to get the majority. There's some competitive races that Democrats are defending in places like Michigan and Georgia. So they would have to hold on to those, and then they'd have to flip 4 Republican-held seats. Lots of focus on North Carolina, where I think the Democrat is favored to flip that seat. Maine has become really confusing because the Democratic candidate imploded and had to drop out. That probably gives an advantage to Susan Collins, who is seeking her 6th term as a senator from Maine. And then Democrats are looking at some pretty red states to see if they can flip seats in Alaska or Iowa or Ohio or Texas. I think it's a tough road. I can certainly draw you a scenario in which that works. A big blue wave election gets Democrats there, but I think Republicans remain favored to hold the majority in the Senate. So if my prediction comes true, we've got a Democratic House and a Republican Senate next year. That's a recipe for gridlock and really struggling to get things done. Well, there's an old adage that the markets like gridlock in Washington, and so maybe that'll prove to be true. But we've got big issues that just don't ever seem to get solved, and I'm not sure that a split Congress in 2027 is going to help that much.
Yeah, so we'll follow that along, and I really want to make sure folks can follow you. I want to end with that, but I do have one last question. There is so much going on, and some of these, I would say it's as polarizing of a world as we've ever lived in, or at least I've ever seen. There's so many news stories coming out on a daily basis. How can you kind of give guidance on what's important to the markets, right? Because there's so much that feels personal, yet does it really impact the markets and whatnot? Maybe give us a little light on how folks can kind of bifurcate that.
Yeah, I think this is really, really important, and probably the most important takeaway from our conversation today is, I speak all over the country to clients and investors, and the biggest thing I'm seeing right now is huge emotions. People are very, very passionate about what's going on. They're happy about it. They're horrified by what's going on. They want to move to Portugal, whatever it is that they're, seeking to do. There's just a lot of emotion of stuff. And I think it's really incumbent upon all of us and on advisors to help clients manage those emotions, because the reality is that most of the things that investors are really emotional about right now are not actually affecting the markets. The things that affect the markets we all know, right? The Fed, tariffs, the war, and its effect on inflation, those sorts of things. But a lot of the things that get people the most stirred up just aren't affecting their portfolio. And I think it's really important for all of us to help clients see that and not make emotion-driven decisions because of the headlines, because of some tweet that they saw, just not to have these kind of knee-jerk reactions. And I'm just seeing a lot of that kind of emotion clouding investment decisions. And that's why I think advisors play such an important role right now in helping clients step back, keep focused on their longer term plan and not react to every piece of news that they see every day.
Yeah, I think that's really important. And maybe even keep clients off social media would be helpful too. Advisors off social media that might be more healthy for all of our mental state, especially over the next few months, where in my mind it's not going to get lessened in terms of the points of view.
Yeah, I think that's absolutely true.
All right, Mike. So you gave us some incredible some predictions. You've covered a whole bunch of different areas. As financial advisors, how can we best follow you to kind of see it and follow your best thinking leading up to November and well beyond that?
Yeah, absolutely. I am on X, Twitter, at Mike Townsend CS, the CS for Charles Schwab.
Yep.
So you can find me there. I'm on LinkedIn, so please follow me and connect with me on LinkedIn. And then I have a podcast called Washington Wise. Comes out every other week. It's coming out tomorrow morning. And you can find that on, wherever you find your podcasts, Apple, Spotify. Washington Wise is the name of that, and I do a lot of this kind of deeper dive into some of these issues there. So those are probably the best ways to keep track of me.
Wonderful. And for everyone who's watching this after the fact, we'll have some of the links that Mike just talked about in the video towards the end. So you'll be able to go and access those. And I highly recommend following Mike and getting to know some of these issues, especially as they affect your clients and affect the markets leading into the midterm elections. So let me stop and stay here. I really appreciate you and Charles Schwab making you available for this. For all the content we have, this is a major piece to what advisors should be thinking about. And your insights were wonderful today. So we really appreciate you.
Appreciate it. Thanks so much. Have a great day, everybody.
All right. Be well, everyone.